Hey everyone, it's Ben Hardy here, and we've got some big updates for the used car market. Before we get into this video though, as always, if you're going to save time and money the next time you purchase a car, link to my car buying guide in the description down below, and then some of the information provided comes from Cox Automotive. Let's get right into it. So the big story for today is that used car values are still declining and they are not stopping anytime soon, or at least that's what the data looks like. So the big data point here, 12.1% is the year-over-year decline with used car values. That's bigger than what you normally see for a year-over-year change. The month-over-month change that we saw from April to May, 0.6%. Now that's the adjusted number. Non-adjusted, 1.2% decline. So that's strong. And if you look at the graph for used car values, you've got the exponential spike during the pandemic, and now you have not quite exponential, but it's starting to almost look exponential for the decline post-pandemic. And so, prices are coming down on used cars. And something to note is that if you look at the 3-year-olds aggregate index, this is something that really shows the overall health of the used car market. It shows that there's a decline of 2%, right? And what you typically see within this, or what Cox Automotive says, is a 1.5% decline. So again, we're bigger than what we normally see in terms of these declines. Now, at auction, the sales conversion rate's actually really strong, 56.4%, but cars are not selling at value. 98.8% of MMR is what cars are selling for. So again, that shows weakness in terms of the value. So people are buying cars, right? The dealers are buying cars at auction, but they're only buying them if they get a discount on the pricing. Now, if we dive into individual segments, luxury cars are down by 11.4%, compact cars 17.4%, mid-size cars 16.3%, pickup trucks 11.2%, SUVs and CUVs 13.2%, and then if we look at non-EVs, 11.6%, EVs 16% for the year-over-year decline. So EVs are still weaker than non-EVs when it comes to resale. And something to note, the month-over-month decline for EVs was 2.4%. So definitely exceeded the overall market because non-EVs declined by only 1%. So it still shows a ton of weakness within the used EV market, which, over the course of the last few months, we've been talking about how, EVs have been kind of soft on the market because of price declines. We haven't really seen a lot of price movement with EVs this year. I mean, some EVs have actually gotten a little bit more expensive, so we've got that price movement. So the new EV market is not causing these declines. It's just the fact that people either don't want to buy EVs or they expect a bigger discount on those used EVs if they are going to buy them on that side of things. So let's talk about what this means for the market, more specifically, obviously, the used car market. This means that we are most likely going to continue to see declines because, again, if you look at the overall trend of the graph, it's not showing a trend of stability. What it shows is that we had that peak and we had a quick decline post-peak, and then things kind of stabilized for a minute and then they went up, right? Dead cat bounce is what you could say. Another little peak, and then things have just been going down and they haven't really stopped. We've had some moments of stability where maybe a month, kind of trades flat, but for the most part, it's been decline month after month. Again, 12% decline year over year. And if you look at interest rates, if you look at the overall state of the economy, you look at the amount of cars that are available on the market, you look at new car pricing, and it all just kind of adds up to the prices are going to have to come down across the board. New cars are still too expensive. Used cars are still too expensive as well for the newer stuff, right? If you look at used cars that are, let's say 10, 15 years old, some of those, right, they kind of make sense with the values. Some of them, not all of them. But the stuff that's really sticky in the market right now is the newer stuff. So cars that are 1, 2, 3 years old. A lot of these cars are still going, they're at the retail prices are still going for close to original MSRP, or some of them are original MSRP. And that just doesn't make any sort of logical sense. So buyers are holding out. Now, the last thing I'm going to mention before we cap out this video is used car inventory levels. they are still lower than, what they are normally in the market, and they are lower than what they were last year. So that could provide a little bit of stability for the market throughout this year, the fact that there's just not as much inventory available. But my personal take is that there's a lot of pressure from other points in the market that are going to win out when it comes to the values continuing to go down. I don't think that that's enough upward pressure, if that makes sense, to keep values up. I think that it's providing a little bit of a cushion, but the force in terms of pushing the values down is a lot stronger. Let me know what you guys think about this situation, and well, hopefully this means that we're going to eventually get more affordable cars in the future on both fronts, because I think that manufacturers are starting to realize that they price themselves out of the market, and with these used cars, people are only going to pay so much for someone else's problem. I'll see you.